Okay, so now let's jump into the actual charts. All right. So here's what I was talking about with Bitcoin that could be interesting here. Because all the macro data is telling me we're going to get a reversal. We're not going into a recession. There's nothing that suggests that. People who are calling for recession, calling for bear market, I don't I don't agree because there's no data for it. Where's the data? I'm showing you the data. We're getting into more and more favorable conditions than what we were even in a year or two ago. So why would it make sense for us to go into a bear market now with even more favorable conditions? It doesn't make sense. We're just getting a local correction. So at the very least, the way I'm looking at this is we're getting at the least this. Move again. So we got now this is going to be more of a pronounced drawback because it was 4 or 5 years ago, a less stable asset. So there's more downside. But you saw Bitcoin have its first top in April of 21, and then in May and June is when altcoins really ripped fucking face. You drew all the way down 55%, had this major mid bull run correction, and then you ran that bitch all the way back to a new all-time high in November. Okay. So in my mind, worst case scenario, that's the type of move we're going to get over here. Now, the downside is already taking place over here on Bitcoin. Okay. So either we've already made a low here with that 30% pullback. I mean, genuinely, I just don't see it coming back down lower than that. Maybe it sweeps that low, takes that liquidity barely, and then comes back up. But that's essentially the bulk of your move. Now, why would it be less pronounced of a drawdown than this one? Well, because we have ETFs now. We have major players in the sense that there's a lot more liquidity. There's a lot more eyes on Bitcoin. More people are accumulating it, etc. The downside is going to be more muted. So it's a 30% drawdown instead of 55%. So worst case scenario, I'm looking at this and I'm saying, okay, well, nothing macro tells me that we're doing a recession. So I'm looking for a move like this, at least, or something like this, a little bit higher maybe, right? Where you get a double top. It's possible. Maybe we just get another double top. That's what happened last cycle. Well, if we get a double top, that means all of your assets are going to at least run back to all-time highs as long as they were assets that have correlations to majors. This is why it's so important that whenever you're accumulating some of these, altcoins, for example, meme coins, the reason we trade the boys club, Pepe, Brett, Andy, Wolf, is because they're correlated to a major. So that whenever you get these major drawbacks, you know with confidence that they're going to come back with some fucking intensity, with some upside, because they're correlated to Ethereum. So when Ethereum moves back up, they'll move back up. The issue with all these other shit coins that are based off of attention, if they're not correlated to majors, once they're down 80%, 90%, they're never coming back because the attention's gone. They have no correlation to a major asset. That's why the boys club is so good, because it is correlated to Ethereum. So if Bitcoin and Ethereum start pumping again back to all-time highs, guess what? Those assets go back to all-time highs too. Right now is your generational bid, your generational entry. So worst case, I'm saying, all right, well, we get a double top then. Do I think we get the double top? No, I think we go higher. And I'll show you a couple of points as to why I believe we go to new all-time highs. But that to me is worst case scenario, is we just run it back for a double top and then it's over. Okay. So that's that. So you can see that pretty clearly. I mean, look, if you just look at the chart, it looks pretty similar. I want to move this because I know I'm in the fucking way. Okay. I mean, that looks pretty similar to me, right? I'll move that out of the way, right? So you get this big move up, got this big move up, went sideways for a little bit, went sideways for a little bit, drew down, did our double top. So it would look something like this, right? So you go sideways for a couple of weeks, all right? Come up a little bit, and then like that, right? There you go. That's your move, right? So that's your double top scenario, okay? Do I believe we double top? Not necessarily. I think we go to new all-time highs. So locally, you know what? Let's not even look locally on Bitcoin. You guys get the point. We're talking macro today, okay? Okay. Let me look at. Here's another reason why Jerome is going to be incentivized to bring down interest rates. Here is US 10-year yield on bonds. Okay. So what was interesting is we had this pumping ever since the bear market in during COVID, right? So here's your COVID drop right here, March 2020, and then we've been moving up only ever since then. Okay. Keep in mind, if government yields on bonds are moving up, that is bearish for markets because it incentivizes people to take the guaranteed interest rate on their bonds and get paid out in US dollars. Okay. So finally, it looks like we topped and now we're trying to break down. Okay. So you got your, you could call this thing right here your shoulder, however you want to look at it. But to a degree, you could say this is a head and shoulders, right? So here's your shoulder, here's your head, here's your shoulder. Okay. So this is going to start to do this. When these bond yields start dumping, okay, it's another reason why Jerome is going to have to lower interest rates so that the yields are better on the bonds, okay? So we had drawn this out. This is your demand locally on these bonds. We got to break down through this demand zone right here, take this liquidity here, maybe we bounce back up into the demand and turn it into supply overhead, and then come back down to this demand zone. Once we get back down to this demand zone and you see it start to break down from here, this thing's going to start nuking. Okay, this thing's going to start nuking because there's not much holding us from dropping back down lower. Okay, as the yields come down, there goes our altcoins, our risk assets, because people are going to rotate their capital back into risk assets.